One.
The rally continues. End of show. Follow through from that wicked pre-market action on Tuesday. Wednesday's an update. Thursday, we're starting out in the green thanks to Meta. Got some really good earnings reports, and we have some really bad earnings reports. We'll cover those. 8:15, Marc Chaikin returns from his market hiatus to give us his thoughts on the markets heading into the election. It's Thursday. It's pre-market prep. Let's fire up.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. Good morning. Great morning, traders, investors. Starting out in the green by 19, 18 handles at 55.76, moving in on that $5,600 level. Buck going the right way, up nearly 30 cents, 104.15. TLT after a good day yesterday, flat at 94.69. Crude making its way back up 47 cents, 78.38. Gold up 12 bucks at 24.85. Silver over 29. That's up 12 cents. Bitcoin quiet today, down $565. That would be in the futures at 65,120. Let's bring in Triple D. And Triple D, I hope that you had a little easier night in the markets than you did on Tuesday. And let's bring in AB too. Dennis, how are you doing on this Thursday?
We're okay. It was definitely a quieter night, Joel. I don't know if it was an easier night, but it was definitely a quieter night. But the rally continues here, tacking on. We're seeing pockets of holes, though, in this recent rally here. Small little holes, and we'll talk about those in a second here. So it all looks good until you start lifting up the hood, and then you're seeing maybe a little bit of signs that the rally could be petering out a little bit. And it has been an impressive rally. I mean, 2 days, and you were jokingly saying, well, Nvidia's going straight to 120. Well, it's exactly what it did. I know you were joking when you said, and we were, 110, 111. It went up another 9% intraday yesterday. Nvidia going all the way from 100, we know, after hours, rallying to 121 last night. Incredible here. AB, how are you doing over there?
I am good. I mean, this was the Nvidia. It's crazy that Nvidia is now a $3 trillion company, and it still trades like it's some small cap, going up 20% in 2 days.
Crazy.
I mean, I was looking at just before. I mean, Nvidia is not the top story of the day. Obviously, we have some big earnings to go through, but Nvidia did close up more than 12% yesterday, so it's got to be up there with the top stories. I was looking at some options contracts yesterday for some leaps for options that expire, calls that expire in September 2025. So this is 13 months away.
What strike?
250. They were up over 80% yesterday. To see that type of a move in an options contract that's so far out is insane.
250 calls talking, it's got to go up 100% for you to break even on those.
Right now?
No, I'm saying, I'm just putting in perspective because the stock's 120. You were looking at $250 calls?
Yeah, they closed at $2.97 on Tuesday. And then yesterday they closed at over $5.10. So they to see those types of move. I mean, the stock went up 12% in a day. So obviously there's going to be a lot more interest in those. But just to see that type of a movement on an option contract that's so far out is very rare. So I thought that was interesting when I was
that might have gotten out of whack. I don't know. I mean, I know
there's $2. People are taking lottery tickets everywhere, Joel. I mean, that's what they do.
2 to 5.
Yeah.
Real quick, before we got a mess of earnings reports. We have Marc Chaikin 8:15, but I'm looking at this Nvidia chart, and to me, the after hours printed 100, the high at 140. I'm thinking this 120 area is huge. But if you go from the daily low from 2 days ago, it only was 102.54. But since there's such nice round numbers, 140, 100, 120, I don't know. I just make that the big number for today. Also moving forward, you got back half of that move in the heartbeat. Dennis, you last time you parceled out of Nvidia is when it had the big break from 140 to 120, and then it rebounded back over 130. So, we got to be careful. This is just another retracement and perhaps a little bit longer of a downtrend. Sure doesn't look that way right now. We're up $3.16, and those 8 o'clock prints just drove me absolutely crazy on that one. But let's keep an eye on that 120 area long term.
I'm
See
going
if
to
we
be
get a
back
bid
at you in
there.
3 minutes. Somebody just came in here, and it's a buddy of mine. I just got to go talk to him for a second.
Okay, we got an
when I work from
intruder.
home, some things come up. But I'll be back. You guys going to handle the Feds. Talk the Fed. I'll be back.
Fed me. All right, let's talk Fed.
All right, so yesterday, as anticipated, the FOMC decided to keep rates unchanged. Powell took the stage 30 minutes later, the podium 30 minutes later, to answer questions, to give some more color. And he was talking about, that the inflation path continuing moving toward the 2% goal. He said if the Fed interest rate cuts are on the table, was the phrasing he used for September, if that economic data continues to show slowing inflation, which, I mean, the market appeared to take that in stride as bullish, that they're talking about rate cuts, but it's not. Right now, the Fed Watch tool is pricing in 100% chance of a rate.
110.
110%?
Yeah.
The way that Powell was talking about it didn't really sound like 100%. He said on the table. When I hear on the table, I'm not thinking like, oh, that's 100%. But either way, you didn't see any reduction in the probability on the Fed Watch tool, but I think that might have just been Powell. He didn't want to come out and say, oh yeah, we're for sure cutting rates, and then risk inflation numbers being hot and then having to go back on that. So either way, it seemed like he kind of set the mood for a rate cut in September without completely committing to it yesterday.
Yeah, I saw someone in the chat yesterday, and they're like, "Oh yeah, Joel said that there was no cuts this year or whatever," and kind of calling me out on it, which I don't mind. I mean, I make good calls and I make bad calls. I don't know if that same person though has been listening to the show for the last 2 years when Mitch and Dennis were batting down the hatches and looking for the recession in China to invade Taiwan. I said no. There's not a recession going on. So don't get all my calls right. I don't think we need a cut in September. They may do it. They may go very well. Maybe the Fed needs to get at the head of whatever is going on. But man, things are still rolling pretty well. We are seeing some signs of slowing down. Quarter point, decline is not a lot. It's more of a trend. And, we'll see. I mean, if the Fed goes through it, if they do it, they'll say we're doing it, and then we're not doing anything for a while. So I think that cut is baked into the market already, and we will see. We'll find that out at the next meeting. But the price action speaks for itself. The earnings speak for themselves. The fundamentals speak for itself. There you go.
All right, well, let's hop into some earnings reports. Of course, last night, Meta was the big one, and they blew it out of the water, Joel. I mean, Meta, and I don't know if you went into the report at all or listened to the call or read anything about it, but the one thing they did talk about, I'll give the top line numbers real quick, and then we'll go into some of the details. So Meta reported, let me find the numbers here. Wow, there's so many headlines in Pro about Meta. All right, so Meta reported EPS of $5.16, beat by 40 cents. The estimate there was $4.73. The revenue of $39.07 billion, beat by $760 million. It says it talked about a sales boost, talked about AI. The guidance was strong. The Q3 guidance was well above the estimates there. So you saw the stock basically immediately pop. What did it get up to, Joel, in the
Oh man, and these are including the 8 o'clock prints here. You got the 5:15:16. That was before the 8 o'clock prints, and then you got up to 5:15:15. Absolutely nothing here on the dailies to warrant that being a major level. I'll give you a level here, right where we're trading right now. Our close on July 11th was at 512.70. you're trading there right now. A lot of people getting their money back from that day on. That was a big, ugly candle. You'll have to work your way into that candle. Make sure you get followed through in the pre-market high. I just, I know there's been, we don't have one per se price pattern that always fits the same bill, but I'm kind of feeling meta-ish like I did AMD-ish yesterday. Who's saying, up 13, 14 bucks after a big decline. That ended up being a red candle. So if you're buying meta off the hop, get that follow through, get the bid, keep it going. But right now, meta is feeling a little AMD-ish to me.
Yeah, the only stock that really pulled back yesterday was AMD, which was so interesting. Like AMD started the rally. It was the catalyst for because obviously Microsoft had disappointed. It was really the catalyst for all the chips to take off. And then it decided to give most of it back and not participate. And Nvidia had none of it. Nvidia was up because of AMD originally. Obviously, there was Pelosi buy, which maybe, that was the case because she bought more stock yesterday and that got disclosed during the day. So then people like to really chase Pelosi by. So that might have been another reason why Nvidia was up. But so interesting that, AMD starts it and then it fizzles out, but nothing else in chip land fizzles out. So I don't know. And I want to take it back to Nvidia here too. And I don't know if you guys talked about it when I was gone. I know you're talking Fed and stuff, but we were just getting into like the perspective of it, $101, $100 after hours to $121 last night, like a 21 point move for Nvidia, which is like the second most valuable company in the world or third. I don't know if it's Microsoft or Apple. They're always changing hands. But, when you're talking almost $3 trillion company, your original point A, B, tacking on 20% in 24 hours without any real news of their own. Those are incredible moves. And I mean, if you were just so lucky or smart, I guess, to pick it up at the 100 support, which, would be psychological support if you were picking up at 101. I don't know how you're not flipping it out for 20% on this company in a day. Like, I don't think it's going. I thought it was up 10%. I didn't think it had another 10 points in it. That's unbelievable. I thought there might be some follow through because you could kind of feel like people were caught, but I didn't think that much follow through. So hard to justify chasing Nvidia now up here, especially with the earnings reports that we're going to get tonight as well. Like, that's going to, be change. It could change everything again. So, I mean, it's been an incredible 24 hours, but I think if you were picking stuff up yesterday after hours or the day before after hours, you're probably, as a trader, should be flipping it out now.
Morgan Stanley stoked the fire a little bit also, making it their top greatest pick ever, a stock that everyone should have 90% of their portfolio in. The call that they made yesterday, so that kind of stoked the fire a little bit as well. One thing, I know we got more earnings report, but Dennis, since Nvidia split, have you been doing a lot of Nvidia, AMD, ARB, spreads, or are they just too absolute? Because it's not 1-to-1. But have you been doing those at all? Because I know you like to trade a lot of different exotic things. I was just wondering.
I trade everything. So what are you saying? Nvidia
AMD spread.
No, I don't put the pairs on. So okay, so here's a good lesson. We could do this, and then we're gonna get Marc here in 2 minutes here. But traditional pair trading, where you're buying one and shorting the other because the spreads are getting out, and then putting it on as a long-term swing play, I never really have done.
That's hard.
I've never really done that. What I've done is what's called sympathy, where you get a sudden move in AMD and then you're trying to pick up the other chips because there's going to be that sympathy move. And those sympathy moves, like it's headline trading, headline sympathy, call it, where I'm trying to quickly go and scoop up whatever chips I can, or quickly, if tech start in reverse, trying to buy other tech stocks, but not necessarily shorting the leader and buying the laggard. That's a tough trade lately, and that worked very well 15, 20 years ago. I feel like all that stuff is gamed badly now, where you often see one stock go one direction. I honestly think like that's why we often see, I actually play the opposite sometimes. Remember, like when we're talking about two stocks reporting in a sector, and I say, oh, the one's up. Well, the bar is higher for the other one now, and it might go down. Your traditional pair trader gets absolutely murdered on that. So I've actually probably employed a lot of strategies that go opposite to traditional pair trading, which traditional pair trading just hasn't worked well in a very long time.
You could get stuck in those. We know you could get stuck. The train. I can remember when what were you doing? Dell VMware or something? And one day you got, was it Dell VMware or
Well,
who
that's
was it?
merger arbitrage, though.
Yeah.
So I do
Yeah.
merger. So pair trading I see different as merger arbitrage. Like I do merger arbitrage all the time still. It's called risk arbitrage, where you've got a deal on the table, like has Chevron, for instance. Like I was going to get down dirty and has Chevron last night, and I actually saw, as a headline here, and I'm like, I'm going to back off on it. But right now, obviously, we're in the Hess Chevron. You're getting blown out in risk arb because this is a side note: is that they had some ruling, or didn't have a ruling, but they have a ruling on the table. They kicked the date down to like May 2025
Oh yeah.
about this one Hess asset. So that means this deal is not getting done in the next year, and that's why you see Hess right now. If you bring up the chart of Hess, HES, you'll see it down $5.68 right now. That's not an earnings follow through. That's because the deal is, again, the timing of this deal is all of a sudden way out. So if you had, one on versus the other, and maybe you say, okay, well, I'll wait a year, and if this thing came lower, maybe you put the Hess on and short the Chevron. But you've got to really watch headlines when you're trading risk arbitrage. That's all types of different strategy. I think we're still waiting for Marc, so we can continue.
Yeah,
until Marc
Mark,
shows up.
I think Mark, he said he was going to be on stage at an event. I don't know where he's at or what he's doing, but he is. I did talk to him yesterday. I did confirm. So the show must go on. Let's roll on the earnings.
The last thing I was going to say about Meta, it's kind of, they did the whole name change and everything. And then last night talked about basically completely scaling out of the whole investments into metaverse. They're all AI now. They took everything they were going to do in the metaverse and now going into AI instead. So I don't know if they're talking about another name change here. They probably just got to stick with Meta after already doing that. But either way, the metaverse story, not happening for Zuck. And that's actually a good lesson, I think, for traders. It's like he's cutting his losses. He said, you know what, we put a lot of money into this, wasn't working out. Now we're going to admit we were wrong and start spending that money other places. And I think investors liked that because the metaverse, I just don't think it has the appetite that a lot of people expected it to when they first started announcing it and they put out those videos. It looked cool, but I don't know how much really use case there is for that. But let's move on from Meta. Let's go to ARM. And this really shows how strong Nvidia is right now, that Nvidia is trading higher despite a weaker report from ARM. Let me go ahead and pull up those numbers. Give me 1 second here on ARM. Of course, this is the British semiconductor company. EPS of 40 cents, beat the 34-cent estimate. Sales came in at 939 million, beat the 902 million estimates, but the guidance was a little bit weaker than what the market was expecting. They said $780 million to 830 for Q2 revenue. The market was looking for 804. The EPS guidance they gave was in between 23 cents and 27 cents. The estimate was 27 cents. So hit the low end there on the guidance. Stock trading lower this morning by about 9.3%, but it closed higher by 8.4% yesterday. So kind of washed out after those two moves.
It's bouncing. It's a predictable bounce because we have such a rally in everything to do with AI that they probably are going to come in and try to buy a stock like this. The valuation on ARM has never made any sense. That's why I've never put it in the long-term portfolio. I will trade it, though. I was actually buying it last night just because I felt like it was getting down low enough. I've already flipped out of it. Again, we've had a pretty good run already with Nvidia too, though. So I mean, I don't know if I'm in the AI stocks, but when you get a dip right after we just had this ridiculous AI rally, it's kind of predictable the dip's eventually going to get bought here. I don't know if I'm coming at 131. There's so much new information coming. It's such a tricky market here right now because with Apple and Amazon and Intel and all the other ones, Snap, Roku, Square, Net, Twilio, just go on and on. There's a couple hundred major companies reporting here tonight. And it's hard to, put on, initiate new positions because, Apple or Amazon miss and everything changes once again. Just as much as everything was looking horrible off Microsoft and looked, great off after the AMD rally, information is changing constantly when you're in this week of earnings season. And that's why it's difficult to come in and initiate trades. And it's also difficult not to take the quick profits when you get a 20% move in a stock in 24 hours. So I think there's just a lot more information coming here. So hard to be coming in here and initiate positions right now.
Yeah, the pre-market low, I mean, it just got really silly town. Got under 125 to 124.22. So if you want to hold out to the pre-market low, that's fine. I think you have to look a little bit more realistic here and see what happens. See if there's any bids at this 129.10 level. That was your low 2 days ago, and then buffeted by another low just under 127. I know that's a big range, but it's a big stock. And when I'm looking at this one, just like I said, I don't know if Meta's going to get AMD'd. I don't know if I don't think ARM's going to have the guts to pull a Microsoft. Microsoft yesterday comes back, fills the gap, gets into the previous day's range. Just, of course, Mr. Market helped out with that.
Yeah,
Don't
it
know.
totally did.
I don't know if ARM has the legs to do that, but keep an eye on the bottom of yesterday's range longer term. That's 138.94 for ARM.
Microsoft is such a good example on why pre-market and after hours trading is so important. I look at the Microsoft daily chart here, and it doesn't show the 390, doesn't show the 389, doesn't show the 400 because, it didn't happen during the day, so your dailies don't show that up. But it happened, folks. It was down there at 389,
It
and there was some
was.
volume trading down there. I mean, there's a thing for, a software developer to actually put on your daily charts all of the action. And again, maybe it's tough. It's got to be volume constrained because it can't be showing a chart where something traded 10% up on 100 shares. When it's trading millions of shares down there, and you can see it on that chart at 390, that was real action. That really happened down there. It wasn't like it traded 500 shares down there and it didn't, matter. It mattered. And, it bailed out. So, I mean, there was an after hours washout out there. So it's
Dennis, look at
funny how
this
the dailies
volume.
don't show all the action.
Look at this volume.
How much
Okay.
volume was down there on that?
Well,
Yeah, over a
look.
million shares.
Yeah. Well, look at this is the close. Okay. And then this is between 4 and 4:30. Okay. And then
1.6 million.
And then you take the, and then it tapered off a little bit, going into the.
You could
To the
easily say 3, 4, 5 million shares
yeah.
traded below $400. That's not nothing, folks. That's some volume.
If you
Some
want to
people
get
sold it down there. You
oh,
won't hear anybody on Twitter.
no,
Not one
nobody.
person on Twitter sold it down
No.
there.
Oh,
No,
yeah.
every single person bought Nvidia yesterday at 101 after hours or 2 days ago. Every single person. All one is Jeff, I know, did because he texted me with it.
He had the
So
print.
that was a
Yeah.
good one. He had the text to confirm. But I mean, this is Twitter, right? It's like it's the same thing. This is why I don't, I do Twitter, but I don't do a lot of Facebook. I don't do a lot of Instagram. I don't do any. I don't even have an account. I feel like it's just a place to, like, brag about yourself. Like, people are just on there. Oh, look at my kids. Oh, look at my family. Oh, look. And I mean, it's nice to talk about that kind of stuff. But it's like all the content of Facebook, I feel like, between the thousands of advertisements that are thrown at me. Because if I go on there now, it's like ad, oh, somebody I know, ad, oh, somebody I know, ad. I mean, it's just terrible. But in between all that, it just feels like everybody's just on there bragging about their lives. Oh, how much better I have it than you. Oh, how much of a better trader I am than you. So, I mean, if that's what they got to do to feel better about themselves, I guess they got to do it. But I mean, that's why I don't go on there anymore. It just doesn't feel like I get anything cool. Like, and I'm on Twitter, but Twitter's becoming a lot of the same thing. Not so bad with the ads, and I get lots of good information from Twitter. That's the main reason I'm on there too, and to help people give other information. But it's like you never see traders coming on there and saying I had a bad day. Sanglucci is awesome though. He does do that. Remember we've had Sanglucci on before. He was always good, and he'll show like. He's like, I just did this all wrong. Like, and that's where you really learn is like teaching the stuff that you did wrong. Like, okay, I didn't do this right, or I didn't catch this, or I was on the wrong side of this. I mean, that's where you really learn. It's not just, from like, what you're flying and what you're making money off of, how people learn. You learn from your mistakes. So I think, Twitter had more of that, like people talking about their bad trades and stuff. That would be cool. And that's what maybe I should start doing too on Twitter because, I do the same thing. I talk about, some of the good ones I've had too.
Yep.
I try to talk about some of the bad ones too, but maybe we got to talk about the bad ones more, and not worry that people think, oh, this guy sucks. He just loses on every trade.
Dennis,
I mean,
you handle this. I mean, seriously, when we come on in the morning, first of all, when I look at your face, like yesterday when you came on, like I
I'm on the
knew.
wrong side of that
Yeah,
yesterday.
I mean, I could like you. I could tell, and then sometimes it's like, no, my kid just threw up 3 times. I got a sick kid.
That happens too.
All right, we got to move on. We got a lot of
But
earnings.
people are
Carvana.
so
We do.
scared that they're going to be viewed negatively, and people are going to get this negative so they're scared to say anything bad about themselves publicly. I mean, put it out there, man. If they like you, they like you. If they don't, they don't. I screw up trades all the time. I probably lose on a big chunk of my trades. The only reason I make money long term is I cut the losers. That's the one thing. Discipline. The only reason I'm successful is not because I'm a guru and I can figure out, I'm better than the next guy. It's because I cut the losers and I let the winners ride a little bit more. That's the only thing. I cut the losers. That's what you got to do to be successful.
All right, let's get back to the earnings reports. We do have, let's go from one chip stock. We had a lot of chip stocks report. Let's go to Qualcomm real quick.
Okay.
Qualcomm reported EPS of $2.33, beat the $2.25 estimate. Sales came in at $9.39 billion, beat the $9.21 billion. Q4 EPS guidance came in at 245 to 265 versus the 245 estimate. Revenue 9.5 to 10.3 against the $9.71 billion estimate. So double beat, strong guidance, and the stock closed up 8% yesterday. So kind of flat this morning, but still a good report there for Qualcomm if you're long that stock.
I am long the stock. I've been long the stock. I've been wrong for the last couple of months. I haven't owned it for 10 years, so it's been a pretty good one, or 7 years, so it's been a pretty good one overall. But it's interesting, you've got to respect the conference calls. I mean, you're making these bets. And Kramer, we give Kramer a lot of love, and he's been saying it a lot too, and he's correct. You see these big moves. You almost sometimes have to wait for the conference call because a lot of times the conference call changes everything. Qualcomm, talked about, something going on. I retweeted it where, there was going to be, that EPS was going to get hit or whatever from, some event or something that was coming up. And then the stock went from 194 down to like 179 bucks. It tanked just on one comment. And you can see it. And, we were up, and then boom, it's down. It fell like 15 points in 15 seconds. It was an incredible fall off of the conference call. And it was something with the guidance. The guidance was light because there was some, I can go actually find it, and I just forget what the headline was because I don't follow the story that closely, even though I own the stock.
I went to the 15-second chart here. It's really going to be hard for me to figure this out.
It went fast, Joel.
It's going up. It's so hard with these times. Boom. I think this is the 15-second chart. Yep, this is part of it. Took a little longer than 15 seconds, but anyways.
It was fast. Maybe it was 2 minutes. It was fast.
Okay, I'm just being facetious here. Last
time you did that, Nvidia went up another $10.
All right.
The
reason I do that, Dennis, I want to make my learning point. The reason I do that is because these pre-market moves, sometimes they just grab it and they just don't look back. And, because if you were taking, 100 to 110, wow, that's great. I'm going to take my profit. And the reason I do it is that, are you going to get through the pre-market high? And that's usually a signal. Don't think Qualcomm's going to get through the pre-market high here. Kind of in no man's land. So what I'm going to do is let's see what the Bulls and the Bears decide at that closing price of 180.95. That was right near the high of the day. So you're below it right now. If you're trying to long off the open, see if you could get unchanged on the day. And I think you have to look at yesterday's range and look at the low from yesterday if you want to try and pick it up on the cheap at 173.41.
All right, let's move to
we have an 830 number. Chat's warning me. What's the 830 number?
We have initial jobless claims in U.S. productivity, but we have a bigger employment report tomorrow. So
the big one's tomorrow.
I don't think it's really going to move the market that much, but we will watch. But while we're waiting for those numbers, let's go to the used car market and hit Carvana real quick because used car prices lower right now with the high rates, and it's more expensive to finance a car, which is driving the demand lower. But Carvana is taking that in stride. Reported EPS of 14 cents, beat the estimate of a negative 12 cents, so beat that by 26 cents there. Sales came in at 3.41 billion, beat the 3.24 billion. Vehicle sales jumped 33%, upbeat guidance. stock trading higher by 11%. You might say, oh, that's a really big move. Well, the expected move for Carvana was even higher than that, was like closer to 20%. So it was a big jump off the earnings. And I mean, this chart continues to be one of the craziest charts in the market. Got all the way down to $5. I want to say maybe even lower than that.
It's one of the best
423,
comeback
355,
stories
355.
of the last 3 to 4 years. This is one of the best comeback stories out there. I mean, everybody had, I think the debt was trading like 40 cents on the dollar or something. Everybody had this as a zero. It looked like it was going to zero. When a stock goes from $376 to $3, you kind of think it's over. I mean, so it's been one of the best comeback stories. Memesters maybe helped this one a little bit too. They started to get behind it. Remember when it was like down there, the memester trade, and we're booming up. And I don't know if they had any offerings or stuff to try to bail them out if that helped them. Like we know the memesters saved GameStop and AMC. I'm not sure they did on the Carvana. Maybe it was going to save itself, but great comeback story here. It's back. I mean, I don't know. Like I don't know if I'm coming here. I don't like chasing anything in this market because the market seems to pull the rug out, and then it goes pull the rug out on the shorts, pull the rug out on the longs, pull the rug out on everyone, chop fast, fade moves. It's not the kind of market to chase, I don't think.
Yeah, I'm gonna kind of take a little bit of a pass on this one and say pre-market high 155.5. That's $5 away. If you're long, you want to use that as a target, go ahead. I think the other thing, if you're a super aggressive trader and you think this thing is going to 167, which is the next monthly high, and you're buying this early off the hop, man, get a bid above where you're long. And if it goes up like another $2 or $3 above that opening price, and then it comes back down through it, back down the hatches, because got a long way to go to get to the top of yesterday's range. 137, not that far the way this thing moves. 137.92. I'd be out there 138 just to make sure I got filled if it got down that low.
All right, let's keep it going on the
Sure.
earnings. We had a lot of good ones. Let's get to some not so great ones. Moderna reported earnings this morning.
Kaplooey.
So you know what? Here's an interesting, setup. Give us the earnings here. I'm going to tell you a story. I had to trade on this.
Yep. Moderna reported an EPS of a loss of $3.33. The market was looking for a loss of $3.36. Sales came in at $241 million, beat the $132 million estimate, but the guidance was not great. It revised its expected net product sales to $3 to $3.5 billion. Previous guidance was $4 billion. So, just anytime you're cutting guidance like that, not going to be great for the stock price.
Okay. So you know how I've been liking the laggard trade and the low bar. And I was like, this Moderna's got a pretty low bar. I'm going to take this into earnings.
Oh.
So I bought it to take it into earnings. Bought it at 4 o'clock to take it into earnings. Then you had every tech stock ripping last night again. And I'm like, crap, man. This is not the stock to own on a tech day. And QQQ was way up last night. Nvidia was ripping up, and it still is today. I mean, Nvidia's up another $3. And I'm like, they're not going to want a healthcare stock. So I'm like, even if Moderna beats, I don't think it goes up now. Also, the bloody QQQ algo, which I talk about, likes to sell everything that's non-techie in the NASDAQ.
Right. Yep.
This is non-techie. So I'm like, there's a lot of ETF reasons to not own Moderna. So I actually went after hours and I took a 50-cent loss to get out of this because it never traded up after hours. And I'm like, I don't want to be in this report. And normally I would never eat a loss going into the report because I felt like it was good. But I actually sold this last night like 118.75, 118.85. I had to sell multiple times because you're getting out like 100 shares at a time. Or 50 shares, 80 shares, 95 shares. But, you slowly fizzle your way out. So I worked out of this stock for, an hour. Getting out of it. But I was like, I don't want to take this into the report. So sometimes your best trades, I lost 50 cents. That's one of my best trades yesterday, was only losing 50 cents on that. And that's understanding, damage control. And it wasn't even damaged yet. The report hadn't come out. But just was the facts had changed from the 4 o'clock close to Nvidia and every tech stock rallying last night made me think that I don't want to own anything healthcare. I don't want to own any drug stock. And it's also a non-tech component of the QQQ, which they hammer that crap too.
Yep, talk about that.
So that's why I took the loss on Moderna, and I'm going to pat myself on the back for losing that 50 cents. So I could go on Twitter and say, I lost 50 cents. Everybody say, you're an idiot. You lost money. Nobody loses money. I lost 50 cents on Moderna. I'm really glad I did last night because obviously I'd be down $16 and that would have ruined my day or even a couple of days.
I was hoping you were going to say you flipped it to a short.
That would have been cool. I was trying to get out of the long, Joel. I'm like, there's literally no bids. There's bids like $1 down on this. I don't want to hit it $1 down. And I'm like offering like, you know what? When you have like a position, you can offer like 99 shares and it doesn't show up. It doesn't show up on the odd lots. If you don't go on ARCA, if you go on NASDAQ, it doesn't show up. So I'm just like sitting out there in front of the, because I offer and then somebody penny jumps me and penny jumps me. Well, if you go 99 shares, here's a trading tip for you, especially for smaller traders. If you go 99 shares on NASDAQ, you know, on Robinhood, you can't control where it routes you to, but I can control where I route it to. You go on SDQ and you can't see those odd lots, or you go on Edge or other exchange. On ARCA, you can see the odd lots, but you typically don't on the other ones, and it doesn't penny jump you because the algo doesn't see it. So then I'm sitting in front, I'm like, okay, I'm getting out of a little bit, 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 getting out of a little bit. And I don't know, I probably made like 6-7 trades finally try to get out of that stupid thing. But I got out.
Let it breathe, Dennis. Let it breathe.
Out like, so 20 minutes to go at like 7:40 last night. I'm finally getting out of that thing, Joel. I didn't have any, like I would have had to hit it $1 down. I would have literally had to hit it $1 down to get it to get short that thing last night.
No, I know. I was being facetious there.
No, it would have been a good call. I actually thought about like it would have been nice to be short the thing. Like everything changes. So just remember, folks, ETF effects are stronger than any other effect in this market right now. Maybe not the Nancy Pelosi effect, but you know, of like, you know, different, you know, effects. It's super strong and you've got to understand it. And what happens is
it's stronger because Nancy does her stuff occasionally and it's only one side of the market. What you're talking about is on big up days, big down days, big stocks. What you're talking about is encompassing hundreds of stocks. So I think the ETF effect is better. Real quick, technicals on this one. Wow, what a washout. If you wanted to buy this thing near the $100 area where the big boys stepped up in March and April, you have multiple lows at the $100 area. If you want the ultimate low, that was 97. But pre-market low, just like Nvidia, 100 right on the kisser. So if you feel like you missed that move to 170, you wanted to buy it under 105, here's your opportunity here in Moderna. Traded down 1768. And don't think you have much of a chance to get to the bottom of yesterday's range at 118.40.
What matters to Moderna more than anything is what's happening with the tech rally. That's completely messed up, but that's what it is. Amgen's the same thing, folks. Amgen's a non-tech component of the QQQ. When Nvidia's ripping higher, they can't buy Amgen, you know, and obviously if there's news, you know, they can, but you know, you look at Nvidia and you look at Amgen the last couple of days, oh, it's leaking. Why is it leaking? Because it's non-tech component of the QQQ. Go look at those 23 stocks that are non-tech component of the QQQ. They typically move opposite Nvidia to a certain extent. Like they don't have 20% moves, but they're weak, you know, like they're not up on these Nvidia days.
All right, let's go ahead and continue some earnings reports. We also have some big earnings reports to preview tonight. I'm just kind of bouncing around, so if there's any specific ones you guys want to hop to,
I like bouncing around.
Yeah, let's go to Wayfair real quick. And you know, before I read the numbers, you had the CEO come out and compare the market right now for furniture to the 2008 financial crisis. So probably not a great sign, especially when you see other companies doing pretty well. You see stocks right around kind of their all-time high, and this guy's coming out here talking about, oh, this is as bad as 2008. Wayfair reported EPS of 47 cents, which was in line with estimates. Revenue of $3.1 billion, missed by $80 million. But again, those macro headwinds comments that the CEO was talking about kind of hit the stock here this morning, trading down 15% on Wayfair, ticker W.
Whoa, wow. Dennis, we lose.
So what did they say? So say again that conference call comments where they were talking about. Sorry, I'm fighting with the chat here. The chat hates me today.
Yeah, turn
The
them off,
conference
Dennis. Turn
call
them off. They hate me
comments.
too. I don't
What
even
did
know
they
why
say?
people
What did
listen to
they
the
say
show.
about, this is the worst recession since? What did they say?
So he said, our credit card data suggests that the category correction now mirrors the magnitude of the peak to trough decline the home furnishing space experienced during the great financial crisis.
Oh my gosh.
Customers remain cautious in their spending on the home. Continued, we see declines that are similar to the declines that we saw in that 2008 to 2010 period. And I think what that speaks to is the category has been going through a massive correction, a correction that we've previously only seen during a GDP recession. Now, he's just talking about this specific category, the home furnishing, space. And what we have to realize here is that during the 2020 to 2022 years, it was the exact opposite, a huge pull forward demand as people had more money. People were spending more time at their homes. So they were spending more money on furniture and redoing their homes and whatnot. And so, that could just be because everyone spent money on a brand new couch in 2021.
Yep.
You probably don't need a brand new couch.
Forward.
You probably don't need a brand new
I need a
couch every
couch.
year.
I think you're right, AB. That was all pull forward. Where Wayfair during COVID, we had a lot of, pull forward. You're seeing it on other companies as well. So I do think this is more company specific to Wayfair, but those are some of the worst comments you can possibly hear. I mean, if you own a stock and they're talking about this is the worst, for demand for furnishings since we've seen since the great financial crisis, the algos are going to hit that so hard on those comments. I'm actually surprised the stock's not down more on those comments. It's down 14%. It's one of the biggest losers of the day. But that's just the worst thing you can possibly say. I mean, even if it is bad, don't compare. If you're doing bad, CEOs, executives on conference calls, if you're doing bad, don't compare how bad you're doing to the great financial crisis. Don't compare that because they're not going to be pretty on your stock. So it is getting hammered here this morning, justifiably so. When you have commentary like that, that is crazy that they were commenting like that. The great financial crisis, like people who were in that, the stocks, and obviously the demand falling off the cliff, like people were worried that there wasn't going to be any money in their bank. Like there was not like this, it was incredible to think about. So I can't believe that comparison. I can't believe those comments. That's crazy.
It almost feels
I'm not buying the stock when he said that. Not even thinking about it.
It almost felt like intentional, or like he knows that the stocks, almost like maybe what he's trying to do is take heat off of the own company and say like, it's not just us, this whole industry is down in the gutter. Either way, like you said, Dennis, anytime you're invoking the 2008, 2010 financial crisis,
yeah.
I mean, I was like a young teenager at the time, and even I remember how bad it was for, my family alone. Like we wouldn't spend money for like a year because there was just it didn't have it. And so like, it scares people anytime you're bringing that up, because I think it's still recent enough that when you do bring it up, people think about it and people remember about how bad and like tough those times were for, most of America.
Dennis,
just the fear of going to your bank and your money's not going to be there. I mean, that's what started it all.
That is something else. But you know what? I want to give the chat person of the day here for people that make constructive comments. And you, Dennis, you just said that this was maybe specific to Wayfair. Look at good old Lazy Boy. Look at Lazy Boy knocking on the door of all-time highs.
They
right?
don't see any decreased demand from furnishings. It doesn't look like that thing's just killing it.
From my hometown, Monroe, Michigan, we do not have the time for the story today.
Look at Lazy Boy. I know we don't have time for Lazy Boy story. And the chat would go nuts. They're already feisty today, so we don't spend 10 minutes
what
on
I'm
Lazy
going
Boy
to
story.
say.
But wow, that's true. So Wayfair, it's your problem.
Yes. Yeah. If you want to
Ollie's too. Thinking about it, says Ollie's is killing it. Now Ollie sells some different stuff as well. Bargain outlet, maybe, when you're a little harder up for money, maybe you're going and buying.
What about your most hated stock, Big Lots?
Is that still alive?
$1.
I called this one when they started. I told you, when they cleaned the stores up and started selling upscale stuff, that was the end of Big Lots. Everybody went in there for the crushed aspirin container that still had the aspirin in it. I don't care the box is beat up. I'll buy the aspirin. They would stuff that fell off the pallet. That's what we wanted at Big Lots. People were going in there for the deals. They don't have any deals. The last few times, it's like there's nothing cheap, and they raise prices and they clean up the stores. They all of a sudden they thought they were a high-end department store or something. No, you're a wholesale, closer that sells stuff that falls off pallets. That's what we like. They lost their way.
I got a real estate story about this one, but we don't have time. I just want to. I got to hop again early today. I got a busy week. I just want to give you your low from last month, just because we're in that area. Your July low was 47.25. So if you want to look beyond the next global recession or a world crisis, that was your low back in, as I said, that's a low for the month at 47.25. The only thing that kind of scares me about this is you have a monthly low at 45.42, but your COVID low is way down at 24.70. So you're just taking a stab here. I know Marc was at an event today, and he's going to try and do it from the event. So we're going to miss Marc.
It looks like he couldn't do it from the event. So he had an excuse.
Yep. AB, can you take the charts here and steer this crowd into the end of the show?
Yeah.
Joel's got to go too. Everybody's leaving, and I'm not going to be here tomorrow, unfortunately. So I'm going.
Should we take a couple days off? Maybe just
no. We have good guests coming.
Should we take guests
coming tomorrow?
Joel, if you
AB will be here tomorrow.
Okay.
How about Saturday and Sunday? We won't do a show.
Saturday and Sunday we'll take the days off.
All right, Joel. Enjoy your morning. We'll chat tomorrow.
I need a break after this earnings season. This is what I really need, because this earnings season has been crazy. And Thursday and Friday's actually light. You have like ExxonMobil and Chevron. That's it. So if there's ever a day to take off in this earnings season, it's Friday.
Yeah, and I mean, when we look back, I mean, the past couple weeks at least, like I think it actually helped in a way that we kind of got that big volatile day out of the way, and we had Tesla and Google report the same night, and it drove the market like to its worst day in 2 years. And then since then, the market's recovered on all these reports, and really, I mean, outside of like a select few, Meta's was pretty strong. Like it's not like they're really blowing it out of the water, but I think with all these other companies reporting in line with that lower bar that was set after Tesla and Google's report has helped like the market kind of come back. And you're really seeing, I mean, for a minute, Dennis, it felt like people were going to start, freaking out again. Oh, sell everything, CNBC markets and turmoil segment, all this stuff. And now we're basically like, what, a few percentage points off the all-time high? I mean, on the S&P, we're 2.5%.
In 2 days.
In 2 days.
In 2 days. It's all better in 2 days. And I think, it just goes to show you the strength of this market. So I'm not saying the rally is fake. I just think it's too much too fast, and I'd wait for a pullback now. But I kind of thought that yesterday too. And, the pullback, did not happen. Obviously, we tacked on. So, I mean, it's a big move. Again, I just bring it back to Nvidia. And I just think like, wow, you get a 20% move in 24 hours. That move, it's jaw-dropping to me. It's not like it had earnings. It didn't even really have news. We had a Pelosi buy, which is independent of her. We had AMD earnings, which is independent of it. They really didn't report anything themselves. Just unbelievable strength there. And, it goes to show you that this is why I still own a little bit of Nvidia in the long-term portfolio, because they can show short-term weakness. But, long term, stock obviously is just underneath demand. And when it starts going, they can't stop buying. It's like down like an escalator, up like an elevator with this stock.
Yeah, I mean, I think like I don't know. I mean, I probably shouldn't talk because like I'm still looking at it from a longer time frame. So like I see Nvidia at 120. I don't think that's that crazy or expensive, and I'd be willing to buy here if you have like a longer time horizon. But if you're looking,
and that's different. But we're obviously we do investing, but we're also a trading show too. I just think you're going to get a better entry. I don't think, and it was 121 last night when I tweeted that. It's down to 119 here. I feel like you're going to get a shot here at like 112, 113. I think chasing. You know what I always like is the 50% retracement move. So you just moved up $21. Let's say like 110. Even the candle, the low bar from yesterday, 110, 111. And you got Apple, Amazon coming. Who knows what's going to happen there? So lots of unknown. If you're a trader coming in Nvidia at 121 last night, one, you're already underwater, but two, you're chasing. And I told you about when I first started at Bright Trading. I'll tell the story again because it's an important story. I started in May of 1999 at Bright Trading in the Southfield office, and they sat me in the corner because I'm the new guy. I was 22 years old, and I was by this other new kid, And man, he would jump on this train chasing and he'd lose, and chasing and he would lose, and chasing and he would lose. And it was like amazing to watch, just again and again, consistently losing. And I'm like, you know what? I'm not going to chase. I learned that from him, back then. And I still don't chase for that reason. You have 21 points, 20% in 24 hours. There's nothing chasing more than that. Maybe it goes up another 10, but I don't think so. I think you're going to probably have buyer exhaustion in the short term, and then you get a better entry point. It's all about having the best entry points. And if we can teach you anything, even if you're a long-term investor, it's how to get better entry points. That's what we try to teach you.
One thing I will say about like Nvidia, maybe not specific, it is company specific news, but in the last, week in multiple of these earnings calls we've gotten from big tech companies, Nvidia has kind of gotten shouted out. Google CEO Sundar Pichai basically said that the latest Nvidia Blackwell platform will be coming to Google Cloud in early 2025. And he talked about it for a few minutes, but basically the gist of it was he said that the risk of underinvesting in this technology is way greater than overinvesting. And you heard Mark Zuckerberg basically say the same exact thing about Meta and their AI plans, that like the potential missed opportunity by not investing enough money right now upfront in these different AI technologies is like scaring the CEOs to basically where they're all in this AI arms race. They're all in this AI arms race for the big tech companies. And, we know Nvidia is like right now, the biggest by far beneficiary of this, because Meta, Google, Apple, like these companies need time to see that return revenue on AI and like see how the applications will actually drive more revenue, more sales, whatever it is. Nvidia gets it right off the bat because all these companies are just loading up on Nvidia GPUs. I mean, even Tesla and XAI and Elon Musk spending money on Nvidia. So to hear these, hear Nvidia getting named by company in these earnings reports from the big tech companies, I think as investors and traders started going actually into the reports and into the calls and not just looking at the top line numbers, they're like, holy shit, this is good news for Nvidia. Oh, this is good news for Nvidia. This is good news for Nvidia. And then it piles on. Next thing you know, it's up another $20. Like I said, I was looking at the leaps on the calls because like I think this thing is going to break out again, but I'm not saying, to your point, Dennis, could easily pull back again to 110, 105, then maybe get that breakout I'm looking for. But I think we're I don't think Nvidia is done here yet.
We're in the early innings, and again, you're saying what I was saying when the stock was 40 and 50 and 60. Rewind the shows to those days. This is why I was long, and a lot of people didn't believe it then. But it went up a long way. So it has priced in a lot of good news. That's why I've lightened up the position. But I'm not out of the position because I agree. I don't think it's over. I think Nvidia will eventually make new highs again. I probably should have reloaded at 101 when everybody else on Twitter did, but I didn't, because I was like actually worried about, what was going on with everything else at that point in time. It didn't look good. It was a scary point, but that's why, that was, the short-term bottom for a lot of these stocks, because you always, when the stocks are capitulating, when they did, it always feels horrible, at the time of capitulation. People say, oh, it wasn't a capitulation. Well, Microsoft down $30. It was a short-term capitulation. We've been leaking for about a month on Nvidia, for about a month on Microsoft, for about a month on the Qs, and then we just like washed out, 2 nights ago with the Microsoft earnings, and then we bounced. So that was short-term capitulation. It always feels horrible at that point in time to buy. Sometimes you get the guts, and obviously some people did, to come in. But I think, if you've got a 20, you've got, a time horizon of like 5 to 10 years, I think Nvidia is probably still a buy here as well. And I still have it in my long-term portfolio, some of it.
Well, this is a good segue to talk about the upcoming earnings because, like I said, it's important if you're watching Google's earnings and they start mentioning Nvidia by name, you can use that for trading cues if it sounds bullish or bearish. We do have some more earnings coming up tonight. Let me go ahead and share that calendar again. And I should mention that if you guys do want to tune into these calls, you guys want to, if you're following these companies closely, we will be streaming the earnings calls for Amazon, for Apple, for Coinbase on our Benzinga YouTube channel tonight. So again, if you guys want to follow along to those calls, you know where to go on Benzinga's YouTube channel. And yeah, again, today might be the day with the biggest market cap earnings by market cap, because you got Amazon and Apple. That's like $5 trillion right there. You got Intel, you got Coinbase. I mean, so huge night for earnings. Apple, which one do you want to preview first, Dennis?
Let's go to Apple. It's obviously the biggest one there. Amazon's huge too. Let's do a technical just on Apple going in. We'll also get the expected move for you guys. If the chat has it, it'll stop me from calculating it, but I'll just go in. Again, you want to calculate this, you just go into your options platform from the closes because options aren't currently open, and you add up the calls and the puts with the closest strike and the lowest expiration date, which will be this week's expiration, which is August 2nd. And you get 450, 460. It looks like $9 or $10. Not $9. $9. That actually doesn't seem like that much for Apple, but I guess it's really thick and it doesn't usually have huge moves. So it's only a $9 expected move. That feels a little bit light to me actually on Apple, which is interesting.
Yeah, as big as Apple is, it doesn't have, Apple to me, like it makes more sense the way Apple trades, like a little bit more than like Nvidia. You typically don't have Apple going up 12% in a day, and it is the biggest company in the world again by market cap, $3.4 trillion. So I mean, even a $9 move to the upside for that, brings it up to what, like $3.5 trillion. I mean, this thing has even Apple has gained almost like $500 billion in market cap in like 6 months here. So, I mean, Apple still does for how big it is. It is pretty crazy how much it moves. I mean, you look back at April 2024, this was what? 4 months ago, less than 4 months ago, was trading at 164. And
that's a huge move.
And then it got all the way up to 240, but it doesn't feel like it on a day-to-day basis, Dennis. It like feels like you just like look at it and you're like, holy cow, Apple went up 40% over the last 3 months, almost like under the radar because it's not making these huge daily moves of 10% or more like you see some of the chip names do.
Yeah, so if we just add on the 9-point move, 237, it's always nice when you see that, when you're doing the expected move and then you see a level that, coincides with what the expected move is. I don't really see it here though. Like 237 is the highest, that's up 15. That would be more than 9. On the downside, 214. I guess the low of the recent move is kind of there. This one's going to be a tough one. This one's going to be a tough one to really, because it kind of doesn't have, and just as much as some of these companies maybe had a low bar a couple of days ago, like we talked about AMD's low bar, it's like the move up in some of these companies now all of a sudden raised the bar again. It like moved up from a couple of days ago. Like Amazon, I would have said definitely move on to Amazon, maybe AB had, a low bar going into this report because it was down from 200 to like 177. Well, now you're right back up at 189. And remember what happens at 200, folks, on Amazon. It's the Buffett Oxy zone at 659 and the Amazon Bezos sell zone at 200. I don't think he's done selling. That thing gets up at 200. That's a wall of resistance up there for Amazon. So if Amazon does blow it away, keep an eye on that 200 level because other traders are going to remember, oh, yeah, that's where Bezos keeps unloading. The expected move on Amazon, though, just to add it up here, is about $12, $13. So actually funny, if you take the 186 close, that's just about that 200 level. So that does coincide. So if you get an Amazon pop, I'd expect 200 to be, unless they really blow it away. I mean, they come out, blow it away, raise guidance. We got AI, we have new products. We're doing, whatever, another buyback. That can change things. But other things being equal, they have like a good report pops up 13, 200. I think I'd be a seller. I do have Amazon in the long-term portfolio, but as a trader, I'd probably be a seller up at 200 if it pops in that area.
Yeah, and so a lot has been made about Bezos's selling Amazon shares, and I mean he has sold. I just looked it up. Around $14 billion worth of the stock in 2024. That's about, let's say, maybe like 60 million shares, which again sounds like a lot. Guess how many shares he owns?
Oh, he owns so many. How many?
1 billion.
Yeah, so it's
he owns
nothing.
1 billion shares of well, not exactly. He owns 928 million. He owns still 9% of the company. For context, Vanguard owns 6.5%. So like Jeff Bezos still owns so many Amazon shares that when I see he's selling $5 billion worth and he's still got, $150 billion worth. I don't know. It's not to me like the biggest deal. Well, it is, I guess, if you're trading it because it's obviously going to put some sell pressure on it. Like people were like talking about like Jensen Huang selling some Nvidia shares. Like I'm like, I don't think he's selling it because he's any less bullish on the company. I think he just has so many freaking shares that he can part ways with, 5 million of them or whatever it is.
Well, let's be honest here, AB. Jeff Bezos lives a pretty fun lifestyle. So
Oh,
Jeff
yeah.
Bezos is selling Amazon not because he's bearish the stock, because he likes to party.
Well,
So it's a completely different animal, in my opinion. He's on the yachts. He's got the young girls. You just see him out there. It's completely different lifestyle. I'm saying it. I don't know. Maybe I'm wrong with that, but I say that Bezos is a little more of a partier than Jensen Huang. I think I'm pretty safe with that comment.
That's a fine statement. I just don't think he's like, oh, I'm going on this trip next month. Got to sell more Amazon shares.
Gotta sell. I need $1 billion
Yeah,
because I'm gonna go have a fun one.
Yeah, he makes one of those
Can you
sales.
imagine a $1 billion party?
That's what I'm saying.
It would be fun.
He makes one of those sales, and that's enough to fund that lifestyle for 30 years. You can't.
I don't know. He spent what's the yacht? He's got that yacht. What's that thing worth? There's some people. He spent some money, man.
You physically can't spend like that much.
Who isn't jealous? Hobo says he's jealous. Who isn't jealous of that lifestyle? Yachts, he's on a yacht.
I mean, come on. He got in good shape too.
He's got space. He's going up to space and stuff. The guy spent some money, man. So he's like,
okay, the space thing is true. The space thing
ain't cheap.
The space ain't cheap.
Isn't cheap.
He's not even flying first class or private jets. He's flying, to space.
Rockets into space. That costs some money.
Just real quick recap again of all the companies we have reporting this afternoon. We have Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Block, Mara, and Booking. And then tomorrow, before our show tomorrow, we will have ExxonMobil, Chevron, Sundial. Haven't heard that one in a while. That was an old Atlas favorite. Well, Dennis, either way, it's been a great show. We had a lot to talk about. Anything we missed? We missed Teladoc, which I don't know, got crushed. Sorry, Kathy. Down another 20%. Don't know what else there is to really say about Teladoc. We didn't talk Lam Research. Kind of like in line with Qualcomm. I think the report was fine, but I think the bar was a little high. It's in the semi.
Yeah, I think I don't know if it's but I think obviously what we know is you've got to pay attention to conference calls. So that initial move sometimes, and we're in this fading type of market where it's like the initial move and then they want the fake out, and the algos like to do that to you. It seems like they take it down and they take it up. Sometimes there's even violent swings in the first couple of minutes of the earnings release. So just keep all that in mind. But I mean, if you're going through, Amazon's bar is a little bit higher now. Apple's kind of in the middle. Intel's bar is on the ground, but we know Intel always seems to find a way to go under the bar. So I have that in the long-term portfolio, and it has been good. I actually added more. I thought it was going to get a Trump rally, and it went the other way. So that stock's just been a terrible investment for me. Coinbase, lower bar for Coinbase. It's come down a little bit recently, obviously, with some recent weakness in Bitcoin here. But when you look at the Coinbase chart, I do think there's a lower bar here for Coinbase.
All right, well, that will be a wrap on Benzinga's pre-market prep this morning. Again, we will be streaming these earnings calls on our YouTube channel this afternoon, so make sure to stay tuned for that. If you guys want to watch some of those calls, we will have live trading starting up right after this as well. Dennis, enjoy your day off tomorrow. Have a great weekend, and we will see you next week.